Okay, guys, welcome back. Let's get right into it. We're going to cover the stock charts and take a look at what we're seeing this morning. Each day is important because each day, especially if you kind of follow these videos routinely, I know, there's several new people and then there's several people that have been following me for a while. I think you'll understand my analysis as you continue to watch the videos and how it kind of comes together over time. A lot of the time, when I'm making a call, kind of a macro call, I guess, saying I think certain things are going to happen, it takes time for those things to play out. So when they don't play out right away, people think potentially that, my analysis is wrong, and it might be, I can't say that it's not sometimes, but most of my calls are macro calls, they're swing trade ideas. It's general stock market analysis, and it takes time to play out. Things don't just happen all at once. Typically the way, especially if you're shorting, typically the way it happens is it builds and it builds and it builds, and then the dam breaks. And when it breaks, then it happens all at once. So you might have 2 or 3 weeks of that building, and then everything breaks in 2 to 3 days. So just understand that. That's how my analysis works. And the other thing is, I don't typically look to just jump on a trend that exists. Like if there's a momentum trade or something that's just rocketing higher, I don't jump on those. I usually look to fade those, but I don't jump on those. And so usually what I'm looking for is to catch the beginning of the trend. I'm looking for when does the trend stop and change trend, and that's where I want to enter, because for me that's the lowest point of risk. If I can catch that right, I know I'm right and I can ride that out, and if it's not right, I know when I'm wrong and I can get out quickly. So it's all about keeping my risk low. Let's get into the charts here. Here's the S&P 500. All right, so we've got the island cluster reversal. That's just the thing that's in play. So anybody that doesn't know what I'm talking about here, go back and watch the last couple videos, and you'll see I've explained that to the T there. In fact, the last video, I put a link in that video and had when I actually called out this island cluster in the beginning back here on June 10th or 8th or 11th, whatever. So that's still in play. All right. This is a reversal pattern. We're looking for the next leg down in the market, and it takes time. We started to see signs of that yesterday with a nice clean rejection. And I was recording this video up here when it was starting to reject, and I just can't get the video out fast enough. I think it sat in YouTube waiting for approval or whatever for 30 minutes before I could actually get it published. So kind of annoying, but that's how it is. So, but clean rejection, broke down right through some levels. So we've got, here's the support level, it's about 318, 319, which it broke right through. And now that's resistance. And that's the other thing. Watch for how we go through levels. That's a key tell on what this market wants to do. Do we fall right down through levels and without reactions? Does it just, collapse right through? Or do we bounce off of support and get a reaction? That will be a tell in terms of the potency of what this sell-off might be. So just watch for that. Now, we did slice through this one, and we also broke this uptrend that I just marked out. Now, it's not that clean, but I figured I'd at least mark it out to track it. I've only got 2 data points, and so I don't like anything. I don't believe trend lines are a trend line if I only have 2 data points. I need at least 3. You'll notice on a lot of YouTube analyst guys, they'll mark out trends with just 2 data points saying, oh, here's your trend line. It's just not enough data to say that's a valid trend line, because I can connect any 2 points. I can move this down here and maybe move this up here. I mean, you can do all kinds of things. I can have it here. So just mark it out just to check, but it's not something I would just trade off of. It's not solid enough. But here's the thing. We've bounced down. We've got some support right around 311, it looks like, right about there. And it's about 311.50, I would say. And you can see several reactions. You had a gap around there. You held it right here. It held a support right there. Support again. So 311. And it looks like that's what we fell down to, and we got a reaction. So we didn't quite, they stepped in a little early, but that makes sense, all right? The trend's been very bullish. The buyers are going to step in early trying to buy the dip. The dip buyers will continue to do that until they're proven wrong. So they don't know they're wrong on the first drop, all right? When you get a first drop, they see that as an opportunity. They only figure out that they're wrong when this doesn't work, all right? And if it works, they'll continue to do it. So we have to just continue to monitor that to make sure that, to make sure that the short trade continues to work. But it makes sense that the dip buyers would step in here on the very first initial drop. They step in and they were trying to buy the dip. So we got the reaction. We're bouncing up to this trend line or this line I marked out. Now, if this holds and we reject here, I'll leave the line up because that would be a third reaction point right here. I mean, it very well may. And so that's what I see. Now, they could recover this and pop it back into this and run all the way up to 318.70. That is the gap going back here. So it could be a run up to 318.70 and then reject. I just don't think it's going to get that high. I think we're going to probably fail somewhere right around here. We've had the initial reaction off of this support. Now we come back down into support and eventually break that support. That's what I think is going to happen. And so we'll watch that. Let's flip out to the daily chart just so everyone can understand. It's always important to flip out of the smaller time frames into the larger time frames. And the time frames that I use the weekly to give me that general sense, just kind of that aggregate feel of where the market or where something's trending or could be rejected at. I use the daily to tighten that up. I use the hourly to get that razor sharp trend line exactly on the hourly, and I use the hourly for my entries. So I look for breakdowns of support on the hourly chart. That's the time frame that I use for entries. And then I monitor the trade using the 5-minute and the 1 minute in my trading platform. So that's how I use time frames. So here is the daily, and you can see, I mean, it's, island cluster reversal, nice impulsive sell signal right there. We're looking for follow through. So if this sells off today, we've got, plenty of time left. So if we stop here and sell off and get another red candle, that's kind of what you're looking for confirmation on this sell signal. Now, the bulls are trying to negate that. They don't want that sell signal to be there. They don't want that that confirmation candle. So we'll see who wins the battle today. But that's what you're looking for, is some sort of a continuation. That helps the case for that this was a reversal. It looks like a reversal as of now, but it would be nice to see confirmation with a continuation candle, another sell, kind of another red candle. And this is also why I look at the daily. I just spotted this. This is kind of a potential gap, right here at 315.70. So maybe that's where this is holding at. If you go to the hourly, we overshot it slightly, but maybe this hour can't close above that, and that would signal that this is kind of the end of this kickback rally and we're rolling over. So something to watch. That's why it's always important to flip out to different time frames to get a different look. Okay, and then to go to kind of the purest view for trend traders and trend followers. Trend traders typically look for higher, like if it's an uptrend, they're looking for higher lows and higher highs, and the inverse for a downtrend. So to run through that, the S&P 500, you've got higher lows throughout this entire cycle here. And then, even right here, you have a low and then a higher low and then, a higher low here. But if you see the high, we have a high right here, and then we came down and then we ran up to make another high, but we didn't really make a higher high. You can see it right there. There's your high right there at about 322.80, and the previous high was 323.42. So a lower high, and then we sold off. So we've now started what looks like either a consolidation zone where we're going to just chop sideways, or a trend reversal where we're going to start to make a new trend, which would be confirmed with a new lower low. So you'd want to break, I would say just to be safe, we'll break this whole cluster right down here, right there, of 296.87 about. And if I zoom in on the hourly, let's see if that lines up. Yeah, so just to be safe, if you want to say that we've started the new downtrend, you'd want to wait, I guess, for a breakdown of this. But, you know, for me, by the time you realize that, you know, there's huge, you know, that's down 6%. And from the reversal point where, you know, it was an objective area to enter the short, that's almost an 8%. So you have to wait 8%. And it's just not that objective at that point. You know, if we fall 8%, we could be oversold at that point. And then by the time you realize that the trend's reversed, you get short, and then they bounce it back against you hard with, you know, a bear rally or something. So it's just, I would prefer to get short at the objective low risk area where I can get short right here, right where I said it was going to pop into. On this candle, you can get short low risk because you know you're wrong if it pops above the highs, so you've got really minimal risk right here. And if you're right, you can ride this all the way down. So that's how I prefer to trade. And we'll cover Tesla. I know this one's hot right now, so figured we'd cover this. So yesterday I shorted this. It was a really clean trade. I shorted this all the way down pretty much as soon as it started to roll over here. I got short and rode it all the way down to the gap fill. That was my trade right there. Anytime you have a gap, especially on a big momentum name, look for those gaps to fill. So there's gap number one. And, you know, if this thing wants to roll over again, you've got gap. You got another gap there. You've got another, oh, got the wrong tool. You got another gap here. And I'll call these levels out here in a second. And then I know there's a gap way down there that never got filled, 650. I know exactly where it's at because that's a trade that I've been trying to make for a while. And it's about 650, you know, 655. This gap right here, I see at 12, we'll say 1235. This gap, 1140. I'm going a little bit above the gap, but you usually want to, you know, pull your trade above the level. So if you're going to short this more, then, you know, you could run it down to here to this 1230 you know, 1231, and that would be probably where you'd probably get a reaction there, you know, a pop up or something, and then it would roll down, you know, probably break down. And so if it's going to keep going down, then, you know, you're going to fill these gaps. They need to be filled. So this is, you know, this could continue. If I zoom in, you can see what's going on here. I'm noticing it here. So here's your gap, which is about 1550, and that looks to be playing like resistance. Look, we broke down through it and then popped up to it, overshot it, but still the hourly candle closed pretty much right on it, just slightly above it, but close enough for a $1,500 stock. Closed right on it, then failed, you know, kicked back, tested it again. Here, didn't quite test it. Look at that. Couldn't quite get up there this time and starting to continue to roll over. So that's holding as resistance right there. 1550 is holding as resistance. So a break above and an hourly close, a nice hourly close above, would be bullish. You know, that's breaking above resistance. That should continue running. But as of right now, it's broke through resistance and that's holding. It's tested it several times. Can't seem to get above it. I think we're going to head down and fill this other gap, 1230. So watch for that. That's my Tesla analysis. And we'll just continue to see what's going on. Let's flip out to the daily just to get a quick look. Yeah, so a daily close, you know, below 1550 is bearish. That means we held resistance on the daily chart and we should roll over. Now there's no gap on the daily. That was only on the hourly. You don't see the gap here on the daily because that gap was filled in the day. But here's the gap that wasn't filled on the daily. So I think that's a pretty logical target to roll down to. So we'll watch for that. Will it come in the form of an intraday trading? I don't think so. I think it's probably going to come in the form of a gap down and it'll take place in the futures market. So that's what I see. We'll probably get a gap down in Tesla, but again, it's really hard to call. That's all I got, guys. I'm going to get this one out. Thank you. Appreciate that. Leave me a thumbs up and a comment. Catch you guys on the next one.